Hi, welcome back to Joe Blogs. In today's episode, I want to provide you with an update as to what's happening in the Russian economy, and specifically to talk about a worrying rise in the level of corporate bankruptcies. The Russian newspaper Kommersant, which is a business daily similar to the Financial Times, has reported that in January and February 2024, corporate insolvencies have risen by around 60%, and that is a huge increase. And that's a concern from Russia's point of view because in 2022, they introduced an outright moratorium on all bankruptcies. So basically, nobody was able to pursue any companies that weren't paying them because the Russian state said that they didn't want lots of companies going bust. But what's happening now is that moratorium is off. And as the Russian economy is continuing to struggle, more and more companies are getting into financial difficulty. And one of the big problems that Russian businesses have right now is that because of rising inflation, the Bank of Russia has hiked interest rates from 7.5% to 16%. But that's a major problem if you've got debt. Firstly, it means that your interest payments have gone up. But secondly, and most importantly, if you've got debt that's maturing that you need to refinance, you're going to have to do that at a much higher rate. And that's now putting financial pressure onto all of these companies and resulting in a huge increase in bankruptcies. So in today's video, we'll go through the data that's been published by Kommersant, have a look at how much those bankruptcies have increased. We'll also have a look at a new proposal that's been put forward by the Supreme Court in Russia to increase the minimum amount of debt that a company has to have before it can be forced into bankruptcy. So basically making it more difficult for creditors to actually put companies into that position. We'll then have a look at what's happening with inflation and producer prices and wages, because companies in Russia are currently being squeezed in terms of all of their costs. We'll look at what's going on with interest rates and talk about how that's affecting this level of bankruptcies. And then finally today I'll wrap up with my summary as to what I think is going on right now in Russia and why this increase in corporate bankruptcies is partially the result of Russia's move to being a wartime economy. Because as Russia pours more and more money into the war effort, it's making it more difficult for companies that are operating in a general capitalist environment. If you're having to fend for yourself right now in Russia, it's becoming more and more difficult. But before we get started on all of that, I'd like to say once again, thank you so much to everybody that's supporting the channel. If you've bought me a coffee or sent me a YouTube super thanks over the course of the last week or so, thank you so much. And there's been quite a few of them. I really appreciate it. And if you've signed up as a member or a patron, thank you so much for your long-term support. It really helps me to keep the channel going. Now, before we dive into the detail on Russian corporate bankruptcies, I wanted to talk to you about today's sponsor, NordVPN, who are offering Joe Blogs viewers an exclusive deal. Whenever you use the internet, you expose your data, information, and accounts to potential hacking, tracking, and malicious activity. But by using NordVPN, you protect your data, your passwords, and your accounts from all of those types of activity. And the way that I think about a VPN is exactly the same as I think about a seatbelt in a car. As soon as I get into a car, I strap on my seatbelt before I start driving, and as soon as I go onto the internet, I switch on my VPN because it provides me with full protection. However, VPNs are not only about protection, they also open up a whole world of information and content. When I research stories for videos such as this one, I'm often blocked from reading content because I'm not in the right geographical location. However, by using a VPN, you can change your location and access data and also content such as movies, TV shows, and sports matches that are not available for viewing in your region. And the great news is that NordVPN is currently offering Joe Blogs viewers an exclusive deal, which you can access by clicking on the link in the description below, which is showing on the screen now. And NordVPN comes with a no-risk 30-day money-back guarantee, so you can get your money back at any point in the first 30 days if you're not happy with the service. The Kommersant newspaper in Russia has reported a huge increase in the number of corporate bankruptcies in January and February 2024. In January, 571 companies in Russia were declared bankrupt, a rise of 57% from 364 companies a year ago, according to data from the Federal Register for Bankruptcy in Russia. And in February, the situation actually got worse, with 771 companies declared bankrupt, which represents an increase of 60% against the 478 that were declared bankrupt in February 2023. So obviously a 60% increase is absolutely enormous. And unfortunately, we can't compare these figures to what happened in 2022 because Russia imposed a moratorium on all bankruptcies following its invasion of Ukraine. So what we're seeing here is companies really starting to struggle. And there are a number of reasons for this. Firstly, there are the external factors. Obviously, a huge amount of sanctions have been applied against Russia and Russian businesses, and that is impacting lots of different companies. If you were previously an exporter in Russia, then your markets may have been cut off in terms of being able to actually export products to companies in the West. And if you were an importer, if you were buying things in to sell on to Russian consumers, that's also been impacted because the sanctions apply in terms of Russian companies buying and selling things. So the impact of the sanctions is now starting to hurt companies that are not involved in the defense sector. And as I mentioned right at the start of today's video, one of the issues in Russia right now is that the state is focusing heavily on what's happening in Ukraine. It's diverting lots of energy and finance into companies that can help it with the war in Ukraine. So those companies are protected because they're being paid directly from the state, and the state is funding a lot of those purchases using the National Wealth Fund. However, if you're just a standalone company that has nothing to do with anything that's happening in Ukraine and you're having to fend for yourself, life has obviously got much more difficult because of the sanctions, because it's restricted who you can deal with, where you can access money from, and how you can actually make a profit. And a lot of these companies are now struggling. Now, in order to address the current situation and reduce the number of bankruptcies, the Supreme Court in Russia has put forward a proposal to increase the amount of debt that companies have before they can be forced into bankruptcy proceedings. The proposal put forward by the Supreme Court suggests that the minimum amount of debt should be increased from 300,000 rubles, which is roughly around 3,000 US dollars, to 2 million rubles, which is roughly around 20,000 US dollars. Now, obviously, the Supreme Court is talking about relatively small amounts of debt here, between $3,000 and $20,000. And this really puts into perspective just how large the problem is in Russia right now, because it's affecting all corporates. The changes that are proposed to be made are only going to protect the smaller end of the corporate market. So the bigger companies will still face those bankruptcy proceedings. And one of the reasons why corporates are struggling right now in Russia is because of what's happening in the Russian economy. So let's have a look at what's going on with inflation, which has been the starting point for all of the changes for interest rates. This chart shows the movement in the official rate of inflation in Russia over the last 5 years. And the reason that I wanted to show it over this scale is just to show how crazy the situation has been since the start of the war in Ukraine. Inflation in January 22 was at 8.7%. In February, it rose to 9.2%. And then in March, it skyrocketed to 16.7% and hit a high of 17.8% in April. So within the space of 2 months, inflation had increased by almost 10%. However, as you can see, during the rest of 2022, there was a remarkable reduction in inflation. And by the end of the year, it was down to 11.9%, which obviously is still extremely high. Most countries around the world were complaining about having double-digit inflation. So 11.9% still represents a major problem. However, if you look at what happened at the start of 2023, there was a remarkable reduction in inflation. And by April, it was down to 2.3%, which was actually one of the lowest levels in the whole world, which did seem a bit puzzling at the time because the Russian economy is obviously still under a lot of pressure. And if we change the scale of the chart to show what's been happening over the last 12 months, you can see that in January 23, inflation was at 11.8%. It dropped to 11% in February, and then there was that remarkable fall to 3.5% in March. It then fell further to 2.3% in April. However, between May and November, there was a rapid and consistent rise in inflation, and in November it hit 7.5%. And it's remained around that level for the last 2 months, being 7.4% in both December and January. And of course, the reason why rising inflation puts pressure onto companies is that it's increasing the cost of everything. And unless consumers are constantly being paid more money, it means that they've got less disposable income, therefore they're less likely to spend more, and so it reduces the amount of sales that you're making as a company, and therefore puts your profits under pressure. So let's have a look at what's been happening with producer prices, which are basically the factory gate prices for companies in Russia. This chart shows the movement in producer prices, or factory gate prices, over the past 5 years in Russia. And once again, we've got a crazy chart here. The scale on the right-hand side of this chart goes from minus 20% at the bottom to plus 40% at the top. And if we start off by looking at what happened in 2022, at the start of the year, producer prices were increasing by 23%. Now that is an incredibly high rate for producer prices to be going up, especially when you take into account the fact that inflation was sitting at around 8% at that time. So that means that producers were not able to pass on the full increase of their costs in terms of their increase in prices. Immediately following Russia's invasion of Ukraine, producer prices increased and hit a high of 32% in April 2022. However, as you can see, throughout the rest of 2022, there was a remarkable reduction in producer prices, and they actually moved into negative territory in November and December. And by March 2023, producer prices year on year were falling by 11%, which was quite incredible really, because at that time inflation was high in all of the other countries around the world. So if any of these companies were buying raw materials from overseas, they would have been seeing a huge increase in their prices. But the official statistics say that producer prices in Russia fell by 11% in March 23. If we now change the scale of the chart to show what's been happening over the last 12 months, you can see that we've got two clear trends here. In the first 5 months of the year, producer prices were falling. They fell by 5% in January, 8% in February, 11% in March, 9% in April, and 4% in May. However, since June, producer prices have been increasing, and they've been increasing rapidly. And by October of 23, producer prices year on year were increasing by 22%. They remained at that level in November. There was a sharp fall to 4% in December. However, in January 24, producer prices increased year on year by 19%. So what that means for companies in Russia is that compared to this time last year, all of the costs of making their products have increased 19%. So logically speaking, in order to make the same amount of profit, you would need your sales price to also increase by at least 19% just to maintain the status quo. However, as we've just seen, inflation in Russia is only running at 7.4%. So that means there's a differential of almost 12% in terms of the increase in producer prices versus the increase in sales prices. If producer prices are rising by 19%, but prices on the shelves are only rising by 7%, that means one of two things in terms of choices for companies. Either they have to reduce their sales price and accept that their profit margins are being eaten into, or they need to find new markets. You need to start selling things overseas. But clearly that's a major problem right now for Russian businesses because of all of the sanctions and the fact that markets are limited. And this could be an explanation as to why we're seeing such a rapid increase in corporate bankruptcies. Because if your costs are constantly rising, but your sales prices aren't, then you're going to have to accept lower profits. And there comes a point where you're maybe making no profit, you're making losses, and those losses at some point become unsustainable, and one of your creditors will petition for bankruptcy, and that's how you end up being bankrupt. This chart shows the movement in real wage growth in Russia, and real wage growth takes into account the movement in inflation. So basically, if you're paid a 5% increase, but inflation goes up by 5%, that means that in real terms, your wages haven't actually increased. So that would be 0% real wage growth. If you were paid a 6% increase and inflation was 5%, then you would get a 1% real wage growth increase. So what we're showing here is the amount that wages have gone up over and above what's happening with inflation. And what this chart shows is that in December 22 and January 23, the movement in real wages was relatively small, less than 1%. It then started to pick up in February and March when we saw a 2 and 2.7% increase in real wages. However, from April onwards, there was a huge increase in real wage growth in Russia. It increased by 10.4% in April, hit a high of 13.3% in May, was up 10.5% in June, 9.2% in July, 9.5% in August, 7.2% in September, 9.9% in October, 7.2% in November, and 8.5% in December 23. And when you take into account the fact that inflation has risen rapidly in Russia since May 23 and is now running at around 7.4%, an increase in real wages of 8.5% in December means that the gross increase in wages is running above 15%. And this explains why producer prices are running at such high levels in Russia right now, because companies are being forced to pay the workforce more. But from a company perspective, that's obviously really bad news, because if you're having to increase your costs by paying all of your staff more, but sales prices are not increasing at the same level, it means that in real terms, your profitability is falling dramatically. And that's exactly what's happening in Russia right now. The workforce is being looked after because they're being given these wage increases, but the companies are not, and that's why we're seeing an increase in corporate bankruptcies. This chart shows the movement in interest rates in Russia over the last 5 years. And once again, the reason I wanted to go back 5 years is just to show how crazy the movements in interest rates have been since the invasion of Ukraine. And of course, the reason why we're looking at interest rates is that this is the main mechanism that's used by central banks to try to tackle high levels of inflation. So as inflation rises, generally speaking, you will increase your interest rates because it discourages people from taking on more debt. It also increases the costs of existing debt if it's floating, and therefore reduces the amount of disposable income in the economy, which should lead to a reduction in spending and demand, and therefore a reduction in prices and bring inflation back down. And what this chart shows is that in January 2022, the official rate of inflation in Russia was 8.5%. However, following the invasion of Ukraine, the Bank of Russia hiked that rate to 20% as an emergency measure. It then reduced the rate rapidly during 2022, and by September 22, the official rate of interest was down to 7.5%, which is actually lower than it was before the war started. However, if we now change the scale of this chart to show what's been happening over the last 12 months, you can see that in July, the Bank of Russia decided to start increasing rates again. And between July and December, there were 5 successive rate increases to the current level of 16%. And if we compare the current rate of interest in Russia to the rest of the G20, which are notionally the 20 largest economies in the world, you can see that it's the third highest level, only behind Turkey, which is in severe financial crisis at the moment, and Argentina, which is an economy that's collapsed, where interest rates are sitting at 100%, which is extremely high. But 16% is significantly higher than some of the other developed nations, such as the United States, where it's 5.5%, the UK, where it's 5.25%, the Euro area 4.5%, and Australia 4.35%. And one of the reasons why an interest rate of 16% is a major problem from a corporate perspective is because it impacts on the cost of borrowing. If you've taken out debt as a company, then you'll have to pay interest on that. And obviously, that interest is linked to the official rate of interest. The way things usually work is a bank will borrow money or provide money at the base rate, which is 16% in Russia, and then add on top of that a margin, depending on how risky your business is. So it might be 2 or 3 or 4% added on top of that. So companies in Russia a year ago, when the rate of interest was sitting at 7.5%, would have been paying somewhere in the region of 9 or 10% interest on their debt. Today, they're likely to be paying 20% on that, and 20% is a huge increase. And what that does is put huge financial pressure on all of those companies, and it reduces the amount of cash that they've got available to do other things with. So if you've got $1 million worth of debt, a year ago you would have been paying $100,000 a year interest on that. Today, you'll be paying $200,000. So that means that you've got $100,000 less to invest into people, new initiatives, marketing, promotions, all of those sort of things. So that obviously has a direct impact on your ability to grow your business, to keep expanding. But also, if you don't have the cash, if you don't have $200,000 coming through the tills, then you can't make that payment. So therefore, you default on your interest payment, and that obviously puts you then at risk of going into bankruptcy. If the bank decides that you're no longer viable as a credit risk, then it might file for bankruptcy proceedings. And it's the same with all of your customers. If you're taking delivery of goods and services and paying after 30 or 60 or 90 days, if those companies start to become concerned that you can't pay, then they might decide to file bankruptcy against you. Or alternatively, if those companies themselves are getting into financial difficulty, they may say, we can no longer provide you with credit because we haven't got enough cash to be able to fund it. You'll have to pay us on delivery. And that then changes the whole delivery cycle and the payment cycle and puts more pressure on all of the companies involved in this industry. So what you've got here is a classic domino impact. When one company goes down, it can have a huge impact on lots of other companies. And I think that's what's happening in Russia right now. This huge increase in interest rates has increased the financial burden on all companies that have got debt. And so they're struggling in terms of cash flow. And that's having a horrible contagion effect on all of the businesses that they're dealing with. And the other impact that I mentioned at the start of today's video is that if these companies are coming to the end of their existing loan, if you had a 5-year loan or a 2-year loan that needs to be refinanced, you're now having to do that in the current environment where interest rates are sitting at 16%. So that's increased the risk from all of the lenders' point of view because the chances are some of the companies won't be able to make those repayments. And so banks are now becoming more cautious. And so it's becoming more difficult for corporates in Russia to actually be able to refinance all of that debt. And that exposes them once again to corporate bankruptcy. And that's what we're seeing right now. The increase in interest rates, which has been as a result of the increase in inflation, is now causing major problems for all of the companies that are not being supported by the state. And that's one of the reasons why we're seeing this huge increase in corporate bankruptcies. So what's the summary and conclusion today? Well, I wanted to post this video because I think the data that's coming out of Russia, which shows a 60% increase in corporate bankruptcies in January and February, is really interesting because this is really the acid test. When we're talking about the Russian economy and the fact that there's a lot of pressure on Russia and it's having to fund everything from the National Wealth Fund, everybody's sending me messages saying, why hasn't Russia collapsed? You keep saying Russia's in difficulty, but it doesn't seem to be. It's carrying on as normal. And from a state perspective, obviously Russia has deep pockets. It's built up this National Wealth Fund, and it's been using the surplus from that wealth fund to fund all of the losses and the deficits that the state has been posting. So it's going to be quite a while before Russia runs out of cash. And all of the companies that are involved in what's happening in Ukraine are protected because if you're a business that's now providing equipment or machinery or weapons that are being sent to Ukraine, you're being paid by the state. Your main customer is now the Russian state. And so that means that everything will be fine because that money is ultimately coming from the National Wealth Fund. So you're not at risk of being put into bankruptcy. And also, when your main customer is the Russian state, they're unlikely to try to force you to become bankrupt. But if you're not involved in that part of the economy, if you're a business that was importing goods from overseas prior to the war in Ukraine and selling them to Russian consumers, you're potentially in huge difficulty because firstly, you may no longer have access to all of those companies who are selling you those goods because of the sanctions in place. So that may have restricted your access to your main product. So that would be a major problem in itself. But also, because of what's happening in the economy, we are seeing a huge increase in producer prices, but not a huge increase in sales prices because Russia wants to reduce the amount of inflation. So it's targeted on keeping inflation down, and it's also trying to make sure that consumers have enough money, so wages are going up. And the companies are in the middle of all of this, and they're the ones that are suffering. They're seeing their profit margins being squeezed, and in many situations, they've got to the point where they just don't have enough cash to keep going. And added to that, what we've also seen is a huge increase in interest rates to try to bring inflation back down. So any companies that have got debt are obviously now having to pay more interest because interest rates have more than doubled over the last 12 months. So the bottom line from Russian corporates' point of view is that everything that's happening right now is really bad news. They've got restrictions in terms of the markets that they can access things from. They've got restrictions in terms of the markets that they can sell to. Producer prices are going up. Debt costs are going up, but sales prices are not increasing as rapidly as all of the other costs, so therefore their profit margins are going down. And as a result of all of those factors, we are now seeing a huge increase in corporate bankruptcies. And this really shows us what's happening to normal businesses in Russia that are not protected by the state, that are not being funded by the National Wealth Fund ultimately. So this really is a good indication that the problems in the Russian economy are now starting to manifest themselves in businesses that have to fend for themselves, that have to make a profit to survive. And the increase in corporate bankruptcies tells us that the problems in the Russian economy are continuing to rise. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face. I've got some really exciting news for you. I've decided to give away another one of my statues, and this time it's this guy, the man on stilts. Now, if you've been watching my channel, you'll know that this is one of the original pieces that I've been showing in the background for the last few years. This is a truly amazing piece. I absolutely love it. And it's made by a British artist called Paul Moggetts, and he makes a limited number of each one of his pieces, and I've managed to secure a second one of these. But I'm giving this one away, which is the original one that I've had in the background for the last few years. And if you'd like to win it, you just need to buy a ticket in the raffle, which are priced at £1 each, which is around $1.30. So very affordable. So if you'd like to support the channel, rather than buying me a coffee or sending me a YouTube super thanks, why don't you buy a ticket in the raffle and you could have this in your home some point soon. Now, in terms of organising this, I've got an independent company to collect the cash and make the draw for me. So I won't be choosing it. It will be entirely at random. And I will post this anywhere in the world to whoever wins it. There is a possibility that you may need to pay a little bit of import duty depending on where you live and what the rules are. But I will send this anywhere. So if you'd like to win it, please buy a ticket in the raffle and good luck.